Hi there, I'm Jennifer Lee, Senior Economist at BMO Capital Markets Economics. Well, we have a deal. They cut it really close, but negotiators from Canada and the U.S. managed to surprise everyone and arrived at an agreement on trade on September 30th. Not free trade, mind you, but simply on trade. Now, the new deal is no longer be called NAFTA. Instead, it will be called the USMCA, or the U.S Mexico-Canada Agreement. Now, it's not perfect, but it is an agreement, and frankly, could have been far, far worse. Now, some of the broader details include the lifespan. The deal itself is going to have a 16-year time frame and will be up for review 6 years hence. If anyone has any issues, you have 10 years to talk it out, which will take us to 16 years. But at least businesses will know that there is a 16-year period of certainty. Chapter 19, the dispute settlement resolution, that stays, which was a non-negotiable item for Canada. And autos. The threat of auto tariffs is more or less gone. There are some stipulations, but there is no longer that immediate threat, which is good news. But there are things that we gave up. Dairy, we gave the U.S. more access to our dairy sector. Steel and aluminum tariffs, they're sticking around for now. And we're also restricted on forging free trade deals with non-market countries. And if we do make a deal, then the U.S. and Mexico have the right to review it. And if they don't like it, then they can withdraw from the USMCA with 6 months written notice. Again, not perfect. And Congress still has to pass the deal, and there's no guarantee that it will. But in any event, broadly speaking, having the USMCA lifts that dark cloud of uncertainty that's been hanging over Canada for almost 2 years. We're going to wait a bit to see the data reflect the effects of this deal before we make any changes to our growth forecasts. But we should see business investment pick up and trade improve. In fact, exports have been already picking up over the last couple of months. So what does this mean for monetary policy? Well, with this dark cloud lifted, the Bank of Canada is now cleared to continue moving rates higher. October 24th is the next meeting, and a 25 basis point rate hike has long been expected, even before the trade deal was made. For 2019, though, we were looking for 2 hikes. Now we look for 3. Now, as far as the Federal Reserve is concerned, the view has not changed. Backed by a strong economy thanks to previous momentum and fiscal stimulus, we continue to look for the Fed to raise rates once more this year in December and 3 more times in 2019. Thank you.